Hello, everyone. This is Sergio Marrero, and today we're here at another session of RBL1 Live with Christie Pitts, who is general partner at Backstage Capital. Thanks for joining us, Christie.
Hey, thanks for having me.
Of course. And just to share a little bit about Christie's background with the audience for those that aren't familiar, she graduated from San Jose State University, also attended Berkeley University of California and a few other programs there, but has a background in marketing and business development, and actually worked at Verizon Ventures before joining Backstage Capital as head of operations before becoming a general partner there. So excited to hear more about your story. But if you can share with the audience, for those that aren't familiar with Backstage, what is Backstage Capital?
Yeah. So Backstage Capital is a venture capital firm, and we invest in companies led by women, people of color, and LGBTQ founders. And we have been actively investing now for just over 5 years. And we have about 180 companies in our portfolio across nearly every sector and all over the US. We have a few companies outside of the US as well, but the majority of our companies are throughout the US. And so I've been on the Backstage team since late 2016 and been an investment partner since 2017. So my job is really to help find new investments and then help to support our portfolio after we invest to ensure that those companies, that we're helping them be as successful as they can be.
Amazing. And what size investments do you normally make? And can you share a little bit about the fund?
Yeah. So we started out making really small investments, about $25K per company. And that was great because I think, especially for our thesis, it's important for us to provide access to people who may not have access otherwise. So in other words, what that means is that $25K check might have been the first money in to companies, and then we would step in and be hands-on and helping them find additional capital. We've leveled up since then. So now we oftentimes write checks around 100K and sometimes a little bit larger than 100K. And so still an early stage firm. We typically invest at the pre-seed and seed stages. Occasionally we'll do a larger check and participate in a later round, but that's more of an exception than the rule.
Great. And so still around the 100K mark. Do you have any are you guys, I know when we jumped into the crowdfunding platform, for those that may be familiar with Backstage Capital, they are a venture capital firm that use crowdfunding. Can you talk and share a little bit with the audience about how you all did that and why you all did that?
Yeah, so this was a little bit groundbreaking. It's pretty unusual for a venture capital firm to raise on a platform like Republic. And it was really deliberate on our part. So we raised a total of $5 million, and we started in February and opened a $1 million raise. And then the SEC updated the crowdfunding rules in March. So March 15th, the SEC updated the rules to allow companies now to raise up to $5 million per year. So this is a huge shift in the early stage fundraising landscape. Effectively now, companies can raise $5 million a year every year. And really, I think that's very competitive for a lot of VCs. So getting back to why we chose to fundraise this way, it's really important to us that we're creating access for people that haven't had access before. So I already mentioned this when it comes to founders. A lot of the work that we've done over the last 5 years has been to help underrepresented founders get access to venture capital. We invest in them, and then we bring them into our networks. We help them get follow-on checks. We help them with all kinds of resources. And in addition to helping founders, we started to get feedback from our community that many of the people in our community were looking to become investors. They wanted to invest in startups, and also, everything from angel investing to being more interested in learning about VC and how to become a VC investor. And so as a team, we were thinking about different ways to capitalize our operations. And we realized that leveraging a platform like Republic to do a crowdfund would be very much in alignment with our values, because prior to our fundraise, if you wanted to have the opportunity to invest in a venture capital firm and participate in the upside from an investment, like the investment returns that VC firm would receive, you had to be one of a very small group of people. You either needed to be a limited partner, which is an institutional investor that invests in VC firms, somebody like a pension fund or an endowment at a college, or you needed to be a general partner on that VC firm's team. Oftentimes, when you look at a VC firm, most of the people on that team that you see on the team page do not have access to carry, carry is the term for carried interest, which is the upside, the financial upside for the fund. So I'm explaining all of that to say what we did differently at Backstage is we made it possible for anybody with a minimum check of only $100 to have the ability to participate in the financial upside from our firm. So now any of the investors that came in on our Republic raise, as our portfolio companies return, they have the opportunity to see the financial upside from that and the opportunity to see the upside from all of our investments into the future. So these people, some of them were already professional investors and some of them are investing for the first time. And we are just so encouraged by the community and how active they were in participating in the crowdfund. And we're looking forward to working with these folks to help them understand how we make investment decisions, how our portfolio companies are doing, and really help educate them about VC and about investing.
Excellent. And we'll dive in a little bit more as we keep going. We'll love to break down it. It is new, right? Being able to crowdfund for a venture capital fund itself, and would love to dive more into that, but also want to hear about your story about how did you, originally you focused as an undergrad on business marketing and humanities, and now you're an investor. Can you share a little bit of what inspired you down this path?
Yeah, definitely. So I did not go to school wanting to become an investor. I didn't know what venture capital was. I was kind of oblivious to it. I actually started my career at Verizon and I was there for a long time, 13 years almost. And I started as like a part-time customer service rep in a retail store. So like way back in the day, like think all the way back, like think to your very first flip phone or maybe your very first camera phone. And like, that's the era that we're talking about here. Like text messages were like 10 cents or 25 cents each. And, it was just super fortunate that I was able to start with Verizon at that time because I was young and excited about the mobile industry, and the mobile industry was nascent. It just exploded. So we launched 3G and 4G. Smartphones came out, iPhone came out. And as the industry exploded and there was more and more opportunity for growth. So I was very lucky in the sense that I was able to grow with the company. As my skill set grew, I was able to take on new roles and new challenges. And one position that I had was as an executive role, running marketing and sales ops for a large business unit. It was about a $4 billion unit annually. And a part of that job was to support small businesses in Northern California, which is another way of saying to support startups. So back in the day, and this was like in 2012, I started working with companies like Uber and other high growth startups, working with them with Verizon's resources, doing business development. And that was really how I became exposed to the startup ecosystem and started learning about what it was like and learning about VC. And then I was able to join the Verizon Ventures team. So Verizon is like many other corporations. I think there's more than 2,000 corporate VCs that exist. Not a lot of people know this, but like, for example, 7-Eleven has a corporate VC, Lowe's, like any of the major consumer brands that those companies are typically have a team that are investing money from the balance sheet into startups. And the companies are motivated to find startups that will help them move into new businesses. And so that's what we were doing at Verizon. And I was putting together a diversity thesis for us when I found Arlen and Backstage, and the rest is history.
Amazing. And I know Backstage has been through a few evolutions itself, and it says you're co-founder of Backstage Studio. Can you share a little bit about what Backstage Studio is and some of the work that and how that has evolved to today? I know you've all have done an accelerator previously. Can you talk about what you've done and where you are today?
Yeah. So really, we launched the studio to be a complement to Backstage Capital. The best way to think about it is at Backstage Capital, we're investing in companies, right? So we're writing checks and we're deploying capital into companies. And we found that we needed an operating company where we could really like create systems and processes around the resources that we were providing for those founders and also the founders we hadn't invested in yet. So for example, one of the initiatives we launched through Studio is Backstage Accelerator. We ran the accelerator in 2019, and that was a project that I led where we had a cohort in Detroit, London, Philadelphia, and Los Angeles concurrently. So I was basically like, I lived my life on a plane, in other words. And, but I think the cool thing is that, you know, it was really important to us that we're in ecosystems that might be traditionally overlooked by VC, and that we're also helping to support diverse founders that were from those ecosystems. And in each of those cities, we provided, you know, office space and a full cohort and a program that helped the founders with their businesses and also help prepare them to raise additional money from venture. So if you think about it, like Backstage Capital wrote the check for all of the accelerator companies, and then Backstage Studio provided that programming and support. So we have accelerators on hiatus right now. We did take a break in 2020. There was like this little panorama that happened. And we're just regrouping now with our recent crowdfund, and we'll have announcements to come about what's next for it.
Amazing. Okay. And you mentioned you guys crowdfunded $5 million, which is amazing. And we talked about a little bit about LPs getting into funds. What was the, you know, because I was a, you know, proud backer and jumped in to definitely support you guys. But also wanted to reveal, I wanted to talk about some of the nuance there, right? Mm-hmm. Like where an LP gives money to a fund, and then that money, you would invest that money on their behalf, right? And you would get a percentage of carry. So can you talk about like people investing in the campaign? What were they investing in? They weren't LPs investing in the fund. What like how does that work, and how does that work differently?
Yeah. So I'll break it down right now, but I also want to encourage anybody that's listening to go to republic.co/backstage, because this gets a little bit complex. And also, well, like, okay, just to be clear, I want to make sure we're protecting ourselves, right? But also it does get complex, and we have diagrams there that show how the funds flow. And that's probably very helpful to refer to. But I'll just try to keep it very straightforward, which is essentially like if you're an LP, so if you're an investor in a venture fund and a Backstage fund, you have exposure to the companies that are in that fund only. So in most typical funds, maybe there might be 30 companies total. Backstage has invested in 180 companies. So we have multiple funds that we've invested out of. The people that invested in our Republic campaign sit at one level above the LPs. So effectively, they have exposure to all of the funds. So they're not siloed into one particular vehicle. And there's also some other benefits for our Republic investors. So one of those benefits is that the Republic investors has exposure to our management fee. In other words, a venture capital fund, the way that the VCs actually make money is there's a management fee and carried interest. And so the Republic investors that participated get a percentage of that management fee, as well as a percentage of carried interest when the companies go on to have a return. Does that make sense?
Yes. So you're effectively, people are crowdfunding, and you're giving them a portion of your carry, which is your profit, and a portion of your management fee.
Yes.
In a sense.
So essentially, we're sharing the upside as if you were almost like a member of the Backstage team.
Yeah. And then how much of that is represented? Like how would you compare this side by side to another startup? Like there's of course startups have valuations. What would that be for Backstage?
Yeah, so it's definitely a different investment than a startup investment. Startup investments, and I've done a ton of them as well in Republic. Many of our portfolio companies have raised there, and I just think I really love crowdfunding. So I'm active on those sites looking and participating. And so essentially when you invest on a crowdfunding site, your returns come from the startup when they have an exit event, right? So they either go public or they get acquired, and then their position is liquidated, and you get a percentage of that based on whatever percentage you own in the company. So this is completely different from that. So this is not a startup investment. Essentially, the returns that will come to our investors will be, the best way to describe it would be like in the form of a dividend based on when we see returns back from our portfolio companies. So it wouldn't be a one-time payment, it would come multiple times. And effectively, we sold 10%. So we raised $5 million at a $50 million valuation for the company, like the umbrella company that our investors invested in.
Got it. So, so that's and in your hypothesis, like what, you were very intentional about it, and maybe you had conversations with the Republic team. Again, it's new, right? Like, what do you think? Going forward, like, do you see this continuing? Like, how do you see this changing the space?
Yeah. So I think this is going to be a big shift. And I think that many people are sleeping on it and are really not paying attention like they should be. So there's some resistance from your traditional VC industry to the concept of crowdfunding. And I think initially, when the Jobs Act first passed in 2012, some of that resistance came from like logistical concerns. So to be more specific, like startups have cap tables, right? That's how they manage the ownership. And so there was this perception or this fear that the crowd would all have their own line on the cap table. So like to validate that, we had 7,000 people participate in our crowdfund. We don't have 7,000 people on our cap table. That's all represented in one line, which Republic manages for us. So that's the value of a platform like Republic. So outside of that, there's really no drawback to equity crowdfunding. And any organization, any investor, any lawyer, or any organization that tells you that equity crowdfunding has a con that could have a negative impact on your company down the line, frankly, doesn't know what they're talking about. And essentially, I still see this all the time. I just saw it on Twitter the other day where there was an angel group that was like, we will not look at your company if you've done an equity crowdfund. Unfortunately, that's a really antiquated point of view already. And I think that's going to come back to bite them because now we're seeing so many high potential companies raise on crowdfunding. And the fact that you can now raise 5 million instead of 1 million means that you can really effectively capitalize your company and generate months of runway from a crowdfund campaign. I will say it's a different skill set to do a crowdfund than it is to raise from a VC. And so, and it's a different time commitment as well. So like, if you've ever raised for a startup, you know that that's very time consuming. You have to take a lot of meetings. There's a lot of negotiation. And in a similar way, crowdfunding is time consuming, but it's about working with the community you have already and helping to promote the crowdfund. So it's a different skill set. It's more of a marketing skill set, I would say, than your network and who you know. So bottom line is, I think that the new rules from the SEC are democratizing access to capital. And now founders who have the opportunity to build a strong community and build brand awareness and have people that want to have an ownership percentage in their company have the opportunity to not work with VCs potentially ever. And I think that that is going to be disruptive to VCs because unless they embrace this, they could lose out on financial return.
Excellent. On that note, I want to shift into Backstage Crowd. Similar to what we do at RBL1, like having a community that invests side by side. The fund seems like a similar endeavor. If you can share with the audience, what is Backstage Crowd?
Yes. So we started Backstage Crowd last summer, so summer 2020. And it was really like a precursor to what we recently did with our crowdfund, but we are still continuing Backstage Crowd. So I'd love to talk about it. And essentially, it was the beginning of the work that we did to build our investor community and begin this process of democratizing access for investors. So anybody can go to backstagecrowd.com and sign up. If you're an accredited investor, then you go into a private deal room that we have where we share deals that we're investing in out of our fund with you and give you the opportunity to participate. If you're not an accredited investor, that's okay. We're also investing in companies via crowdfunding platforms. And so in those cases, what we're doing is we have a separate room or like a separate list that you go to and we'll share with you whenever we're making those investments as well. And, we're really layering in community for this group as well. So we're seeing the crowd members get to know each other. And I really think, what's fantastic about this is that some people are from the tech industry and maybe they just wanted to ensure that they had a diverse portfolio or diverse pipeline of investments. Many people, though, aren't from tech and they're starting to learn about investing in startups as it becomes more and more mainstream. And they want to ensure that as they are investing, the companies that they invest in are run by people that look like the country we live in. And so, it's very motivating to know that the values are aligned there, and also that we're able to provide potentially great financial upside to these investors, but also a great community where they can learn and meet each other.
Excellent. One thing I want to ask too, and double clicking on crowd, what is it, Backstage Crowd? Can you talk a little bit about the responsibility that we have as those making it easier for people to invest? I think one thing that I see, I am all for the movement of crowdfunding, but I've seen the trend that I see is burying the valuation, like, into the site. So it's like really unclear, like what their revenues are and what the valuations are and what the multiples are, like standard terms that prudent investors use, right? And that average people actually should start looking at, right? As they're investing. Going back to the original question, what responsibility do you think we have as those custodians, and what is some of the things that Backstage is doing to support that?
Yeah. So I think it's really important to always emphasize, and we always are careful about doing this, emphasize how risky startup investing is. Because while you can have breakout successes, and those breakout successes can create massive, massive wealth, the reality is that the majority of startups fail. And so that money is not returned to investors. And so we really encourage the folks that invest with us to be very careful about how they choose to invest, and really only invest money that they feel comfortable losing. And it's easy to say, but it's really important to us. And we really, every time we send a communication, we really highlight this for those people. So hopefully that message is coming through loud and clear. The other thing that's important to note is that startup investing is not liquid. So you could invest in a really high potential company that's doing really well, fantastically, and you still don't actually see a return on your investment until you have that exit outcome. And so that time process can be, on average, it's about 7 years. So that's another thing to consider when making an investment, is that most likely, even if you do have that incredible outcome, it won't be for quite some time. So something that we do is we are very transparent about the terms with Backstage Crowd for all of the deals that we do. I'll be a little more clear. So anything that we do that's for accredited investors, we have a very clear setup where investors can see what the terms are for each deal and understand what the business fundamentals are of that company. For the companies that are investing on crowdfunding platforms, then we're dependent on the crowdfunding platform and how the platform is set up, like what their UI UX is. But essentially, I think it's a really good idea, if you're in a position to invest, to take, to look at your, not that I'm like an investment advisor, so like SEC don't come for me, but like the way I approach it for myself is like, I look at, all of the money that I have to manage, and then I take a percentage of that money and consider it to be very high risk. And that's what I would think of for when I would want to be investing in something like a startup. And then it's about, how do I want to see that money go to work? Obviously, I want to see return on that money, but also, what kind of companies do I want to participate in? What do I want to learn? Is there a specific industry that I'm interested in? That's, I think, one of the greatest and most empowering things about angel investing and startup investing is that beyond like real estate or investing in the public markets, you really get an education and you get to see the founders build over time. And that's very fulfilling.
Excellent. And if you were to dig into a little bit of what do you see for the space, right? We've seen this, the enactment of crowdfunding, now crowdfunding for venture capital. We've seen rolling funds, right? We see all this innovation. Christie, what's next? What are some of the things on the horizon? It doesn't have to only be for you, but you don't. I don't want to coerce you into speaking just for Backstage Capital. But what do you see? Like, take a step back. What do you see for early stage venture capital?
Yeah. So, there's a big part of me that's a little bit pessimistic here, because I think that in some instances, valuations have gotten really wild.
Yes.
And there's a lot of capital in the ecosystem right now. And so at large, I think that those forces are at play right now. And I'm a Bay Area baby. So I've grown up in the Bay Area my entire life. And there's a lot of reminders for me to like 1999, 2000, and 2001, to the dynamics of that market. And also in the public markets. Like I think SPACs are really interesting, and also potentially a bit of a bubble themselves. So anyways, that's all to say that we may have a correction in the market. And it's likely that will happen because we've been in a bull market for so long. And if we do, that's going to impact startups, of course. I think one of the really interesting trends that's come up recently is the trend of founders making angel investments. So this is something that's always kind of been the case for a certain amount of founders, but now I see a lot of founders, even earlier stage founders, making angel investments, even through platforms like Republic or through Scout programs and so forth. So I'm encouraged by that. I think that there's kind of like two paths that I'm seeing. One is I see more people getting into the investing game and leveraging, like using this opportunity. And I think that's fantastic. And then the other is I think that there's a lot of money flowing right now, and that's a little bit dangerous. So hopefully we'll be able to see that can correct itself without knocking out all of the new players that are coming into the space.
Excellent. No, I appreciate you sharing some of that insight there as we dived in. But I know we're coming up close on time, so we're gonna shift. Thank you everyone for watching. This was Christie Pitts, general partner at Backstage Capital, hailing from California, for our interview. Join us next week on RBL1 Live. So thanks again for joining us, Christie.
Yeah.